Earlier in the week we talked about the crude oil inventories and we showed you this equity curve. This is with slippage and commission, and you see it's very cyclical, and we showed you this last dip. We showed the dips with the two run-ups of about 5K, and then we showed you this dip and showed you that the current equity was about $1,500 away. So if you started trading it and the market rolled over, you could put in about a $1,500 stop loss on the strategy. And so what happened yesterday was it took this after hours trade again, and it was profitable. So we talked about this on Monday, and it actually happened. The trade actually happened on Monday, or actually Wednesday. I'm sorry, Tuesday into Wednesday. And so you see the short trade on Tuesday. There is a report, oil rig count report, I believe, and you get this fast move down, and so sometimes you get some slippage on that. But it is profit target, so it was net profitable today on this trade. And the reason for showing you this is it's one of the strategies in the 25K portfolio. And we have a special offer on that. I'll tell you about that in a minute. It's through Friday. Talked about it last week. Inventories report was a loss. Here is the equity curve on that. And you see huge fast move today. And lately, the last few weeks, I've seen this move happen 1 minute before the report is actually released. So you might want to take a look at that because it always goes up 1 minute before it's released, and that could be your new 1 minute day trade strategy, is to ride the backs of these people who are driving this up. In this case, 43 points range on this. So if you get at the close of the 1029 bar, exit at the 1030 bar before the release, because sometimes it goes down after the release, it doesn't always go up, then you might have a nice system there as well. Tick pulse, it is a choppy day today. The market gapped down overnight on Apple earnings news, and then it rallied with the crude oil news, and so we're getting chopped up a little bit on tick pulse today, short and then long and then short, and so sometimes that happens. So if you're not trading this, getting in after a choppy day like this is interesting. We're in a range in this market. The bulls want to hold it up, but they don't want to push it higher, so they want to keep it above 2100, want to keep it above 2120 for the most part. They won't let it breathe. I think the market would have a better chance of going higher if there was more wiggle in it, if it could go up and down instead of just being constantly held up in a straight line equity curve being trying to be generated. But that's just my opinion. And here is the tick pulse equity curve recently. And so we've had this pullback here, pullback choppy market. We're waiting for the election on November the 8th, and so that is still a couple of weeks away. We are at a point now, though, where I think that the market might just say, hey, let's just sell before the election. We don't really know what's going to happen. Let's go ahead and sell before the election. The Fed will probably raise interest rates after the election. Let's just sell here and look to buy back later, either after the election or after interest rates or into the new year. So we'll see what happens. There could be lots of surprises, lots of interesting things that happen, lots of volatility, and so lots of reasons to sell, especially since it won't move higher. But we're trading our system. So here's the gap fill fade E-mini S&P. This is with slippage and commission. It's been choppy for a while, but recently here since April, a lot of the trend strategies have struggled while this has moved higher. So that helps our equity curve. Here's crude oil reversal. Gap fill fade crude at equity peaks. Big trade today on the crude oil inventory news. You see huge move up, and it's really hard to step in front of these trades. If you've ever been burned by a big short trade going against you, oftentimes it's hard to step in front of fast-moving markets and short them, but that's how gap fill reverse did. That's what gap fill reverse did today. These are the bonus strategies in the 25K portfolio. Again, we have a special offer through Friday for $1,800. I'll show you that where you can get that in a minute. Cobra 3 short today. It's only one in the original strategies. SR counter trend gold. It had a pullback and now it's moving higher in the equity curve. These are all with $25 round turn slippage and commission. Cobra Euro pullback. Soybeans day trader 3 pullback, gap continue to B. This is from our book 7 Trading Systems. It's rounding upward. A lot of these strategies have just pulled back in this market environment, so I still like them. As you can see, they still have good long-term equity curves, but we've added these bonus strategies to help supplement them, and they're included in the bonus through Friday, and I want to show you where you can get that. You see the crude oil reversal, gap fill fade crude, gap fill and reverse crude. Those are all names we use for this strategy. Exit at plus 775, so some big short trades. Plus 675 on the after hours and plus 775 on the crude oil reversal. And the weekly inventories is minus 325. So crude is very active in more short 2 contracts based on tick pulse and Cobra 3. Now here's where you get the special offer for this portfolio. Trying to pull that into the screen here. And we released this last Friday. You go to my website. I'll send a link to you at the bottom of this email, but you can go to my website. You can click on More, latest video blog. They don't all have videos, but Trump or Clinton, here's what to trade. We anticipate higher ranges and trends in this market after the election, and here's where you can sign up. Annual lease 1950, that's 10 different trading systems, and normally a trading system is $50 a month, so normally it's about $6,000 if you lease this on a 10 system basis. But you get this for $19.50, and it includes 10 strategies, the original 10 strategies and the ones we showed you. So, and here's what it's done. And this does not include, this includes the equity curves for all the strategies as far back as they go in 2008, but it does not include the equity curves for tick pulse. It only goes back 14 months, and crude oil after hours only goes back to 2014. It does not work before 2014. So we did not include data before 2014 because it's an emerging pattern. And so you may see this as a bias, but we treat this as a new and emerging pattern. So we don't want to include data that it does not relate to this market. Weekly inventory, same thing. It's done something completely different on the inventory report lately. It's been the starter of a new trend, and so we do not include data before March of 2015. So those are the limitations. If you still look at the other seven strategies going back to 2008, the results are still good, and that is the special offer. That's what we recommend to trade for a 25K portfolio. And let me know if you have any questions.